Bring that ass back like a boom, 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 boom.
Hey folks, this is Supernova. You're with Boom Traders Weekly Market Overview. And although it says December 31st, last week of 2022, as I'm recording this, it's already January the 2nd of the new year, so happy 2023. I do hope that this year, first and foremost, brings a lot of health and happiness to you, your families, and your loved ones. And second, of course, I do hope that this is a very profitable year and we're going to be enjoying this together in our Discord server. So without further ado, let me start with the last video for 2022. First and foremost, we do have the disclaimer basically saying this video is for education and information purposes only, and we're not financial advisors, so none of the things that you see in this video is to be considered a financial recommendation of any sort. As far as the session overview, usually we do have the models, the market price action, internals, notes, sentiment, seasonality, and then the summary. So let's start with the market outlook. Now this is something new that I've done. I reworked a little bit the long, the mid, and the short term, and basically giving you a red picture for the market. So this is a little legend right here on the left. Pretty much the red means that we are negative territory on the long term, negative territory on the midterm, and neutral on the short term. You will see when I talk about the market price action why. But in general, the market is negative. This is also confirmed by the overall market model, which is on a sell signal. We also removed the sell caution and the buy caution because it's just, it's just caution. Whatever you take it, it's not a clear signal, so just cautious. And last but not least, you know all too well that the breakout model that we're using in order to evaluate the market as per our style of trading is not working at all right now. Now, this is not to say that it's impossible to make money in the market. However, we are evaluating the strategies that we are using. If you are a person who is day trading, or maybe you're trying to pick tops and bottoms in such a volatile market, maybe you have better luck, but in general, breakouts are not working well. Now let me get straight to my notes, and then we're going to switch back to the market price section. I showed you a couple of those things last time. I'm just going to briefly breeze over them. So this is the way that the market works as of right now. Inflation, then the Fed is moderating inflation by hiking the rates, and the market is responding to that. So the moment that inflation drops, the Fed will stop hiking the rates, or at least hiking them so aggressively, and the market will respond by moving higher. One thing I also mentioned last time is that we have never corrected 25% prior to an official recession, although of course we already know that we have 2 quarters of negative GDP growth, which used to be what we call a recession. Now this term has been switched a little bit, but anyway, officially never corrected 25% before a recession. We have already done that. So whether the market is pricing in further moves down or not, it's something that we're going to see in this year. Now it's 2023, as I said, 2nd of January. This is the major metric that the Fed is using, the PCE, and you see it's starting to roll over and going down. So this is also reflected in the projected pace of the rate hikes. We're going to see it just in a second. What is important, I mentioned it last time, how fast the tightening has happened. Current cycle, you can see the Fed projections, we're going to go over the 4%, so 400 points. And here is the outlook, or what the expectation is for the next 3 sessions. So the first one comes on February 2023. Right now we have about 68% for a 25-point rate hike. And then if we do get this 25-point rate hike, then for the March session, we do have another 60% for another 25-point rate hike. Then comes May. And if the previous 2 are hiked with 25 points per session, then we have almost 43% saying that there's not going to be any more rate hikes. So I think that gives us quite a lot of optimism for mid next year, how things are going to turn out. But nevertheless, it's a situation that, as the Fed has been saying quite some time now, they're moderating and watching closely. So if things change, they will act accordingly. One thing I wanted to stress out, since this is the last video of the year, is something that Tintin posted in the Discord channel, and this is basically the loop that we go for. I would say that, although I do have the notes, although we are talking about inverted yield curves, and we're talking about rates, and we're talking about Powell and the Fed, this is what should be the most important thing for you. Starting with your strategy and the process, and this process should be really highlighted. It probably should take half of this page. The process is the most important thing that you can have. Whether you're trading breakouts, or you're trading reversals, or you're trading intraday, or it doesn't really matter what you're trading. You should have a process in place, and this process should be evaluated on the basis of the feedback that the stocks that you're trading, or whatever instrument that you're trading, is giving you back. So step away from the market and the fundamentals of the market for just a little bit. Follow your process, follow the tactics that you are employing in your process, and get the feedback from that process, so you can modify the process or know when to be in the market and when to be not in the market. So for example, for us, which trading, as I said, breakouts, this market right now, it's a little bit treacherous, and if we are trading, we're either trading reduced size, or we're trading smaller time frames, hence smaller stops, and you can still trade your original size. But we are doing some modifications because the market is giving us feedback that now is not the proper time to load up the boat and go all in. So that's the idea. Go with the stocks, go with your process, see what the feedback is, and try to either moderate it or just stay away from the market for some time until the feedback that you're getting from your small trades or from your pilot positions is improving. I really want to leave with this. Now we're going to go to the market price action. Alrighty, now just as usual, we're starting with the normal three indices layout: SPY, QQQ, IWM. We're going to take a look at Dow Jones as well. So let me just maximize this so we can see a little bit clearer in terms of where we are right now. And if we do go to the weekly, I'm just going to use 3 years weekly, you'll see that we are in a definite downtrend right here. I'm sorry, we have this resistance on top. It's been pretty much respected so far. And given the weekly situation, last 2 weeks, of course, reduced volume. You can see right here at the bottom, reduced volume. And we're just hanging in there. So if we go back to the daily, which gives us a little bit more of a picture right here, the first thing I want to pay attention to is the net highs, net lows. We've been on a net low, although volume is expanding right here. You saw the rejection on Friday. This support zone right here was tested in late Friday prior to New Year's. We did actually bounce back on elevated volume compared to Thursday. However, we still recorded negative net highs, net lows. So this zone right here is definitely some support. We are looking for another test. That's the 50-day in yellow on top. See how that goes. But really no man's land right now for S&P 500. I'm just hanging out there and see how it goes. Now, as far as the QQQ is concerned, this is a longer time view. Again, as you can see clearly in a downtrend, there's also this top layer resistance right here. If we just draw it from the top, and I'll just draw it like this. It's a little bit sloppy, but you get the picture, you get the idea. So you can see almost perfect right here. We rejected. We also had this formation right here with the two highs. Third one rejected on elevated volumes, so clearly on exhaustion. We opened right here into resistance from this area and this area as well. Also, if you look at the weekly, these dotted blue lines come from the weekly chart. If you look at the weekly, we are forming some sort of a bear flag, and I told you watch for a break below. Now we did break below and we stopped dead right here. So this is our support zone right here, around 260 for now. but nevertheless it is looking ominous. Here again, if we take a closer look, net highs, net lows still minus 82. For QQQ reaction, pretty much the same as we saw in the S&P 500, but clearly Nasdaq is weaker. You can see the volume not even reaching the Thursday volume, and as we saw, SPY actually did quite better. Look at right here, so we did almost twice as better as we did on Thursday. However, QQQ did not respond. And last but not least, IWM, pretty much the same thing. The one thing that I mentioned last week, we are making a higher low right here, so you can see this double bottom formation right here pretty much held. Just draw a line. So this double bottom formation, actually triple bottom if we count this one as well, held perfectly. Now we are right around here, so this is some consolidation right here at the bottom, and then we have this upper consolidation zone right here, which is below this resistance, and of course below the 50. That's also the 21 also is on top of it. So it's looking like it's just hanging out right there, and it has to make a decision, right? It's now in the middle of the channel, if you can see right here. So we're just no man's land right here. So definitely some support. I would favor a move to the upside, trying to test again the 50 and the 200 day. This purple line is the 200 day. I would favor this type of a move, especially given the fact that on this selling down, volume just depleted. Of course, this also coincides with the holidays, so we cannot be really judgmental of volume right now in this usually low period of the year. Now we're starting, New Year's, so we'll see how it goes tomorrow when the market opens. But in general, same thing as with QQQ, volume did not actually reach the levels we had on Thursday. And last but not least, Dow Jones Industrial, by far the strongest of the ETFs. However, it only has it's 30 stocks, so it's not really a representation of the whole market, but definitely more secure, more stable names are in the Dow Jones Industrial sector. Now, one thing that I want you to notice here, we are barely below the 50-day moving average. Action in terms of volume on Friday was good, especially relative to the other 3-4 days. We were able to bounce off the bottom, so here we have like a triple bottom situation right here. 200 day, we're above it, so it's up to see, but it's still a very weird formation right here. So it's just hanging out there, trying to get us some direction, and probably direction will come tomorrow with volume coming into the market. So this is what we have for the price action. It's really tough situation to short right now into those support zones right here on the S&P 500 and QQQ. Now, of course, if we undermine those lows right here, you might be looking for a low, but still this is support zone, so really tough to short right here. As I said, I favor a move up at least to the 50-day moving averages on both, and then hopefully we can get some push to the 200-day moving average, which come about 20 points above for the S&P 500 and 35 points above for QQQ. So that's what I have for you for price action. Not a lot to talk about. I really hope that tomorrow will bring some volume into the market so we can see some clarity as far as direction. And let's move into the market internals now. So the general view we have here, the first one is a comparison between the Nasdaq Composite and the SPX. You can see actually the difference is widening right now, so this speaks quite enough that growth stocks, mainly gravitating towards the QQQ, are not doing well. Market is in a risk-off mode. As far as the oscillators, if you look, they're all pinched to the mid zones, pretty much every single one of them. This one is the advanced decline issues, the advanced decline volume, pretty much the same thing. The spike, breadth, thrust in the middle zone, and the McLaren oscillator in the middle zone. Now let's take a look at the other portion of the internals that I look for. And you can see last week we had a reading of 1.65. That's on a daily basis. I don't use that information much, but nevertheless, 165 as far as put call ratio is really elevated. Now the 5-day moving average stance is at 1.1, which is still quite elevated, showing that markets are looking for hedging. As far as new highs, new lows, we also saw this same thing as a histogram in when we're looking at the price action for S&P 500 and Nasdaq. Pretty much the same thing. You can see minus 82 for Nasdaq and minus 24 for S&P 500. VIX just hanging around there at around 21, 22. We do have this support from below at around 20. We're just in the middle section right here, so nothing really surprising. As far as the up-down volume, you can see it's a mixed bag, but we're still below as far as the moving average is going, so volume is still on the low, with the exception of Dow Jones Industrial right here at the bottom. You can see was positive for Friday and Thursday. Now, one thing that I want you to notice here, we did have quite a push in volume as in Dow Jones Industrial and S&P 500 on Friday, as we saw from the charts, but you can clearly see that we remain negative territory for the S&P New York Stock Exchange. Now, as far as the advanced decline issues, as we saw, Nasdaq and New York Stock Exchange were both down. Russell 2000 down, and even Dow Jones Industrial was down, although saw positive action, volume was up. Last but not least, when we take a look at the stocks above their 50-day moving average on the S&P 500, currently we see it at about the mid zone, so 0.47 or 47% of the stocks are above their 50-day moving average, which is about in the middle zone right here. So we are not clearly oversold as we were as we were a few weeks back when I told you that something is terribly off in this market, and we did have this rejection from the resistance line on both S&P and QQQ, and we fell accordingly. Now we're just hanging in the middle zone. As soon as we get to, I would say right around here, 10 to 15%, then we might be looking for some oversold signals for a bounce. Pretty much the same thing is happening with the stocks above their 200-day moving average. You can see right here, this was a pretty much breakout zone out of the 50%. We're hanging in right around there. Although again, this is a little bit deceiving because the market's really weaker than what these indicators are showing. So we might be actually seeing additional weakness in the market. So that's what I have for you today for the internals. Again, pretty much everything is in the mid position market as far as new highs, new lows is on the negative side. So I'm not really seeing any positive action unless something really unexpected happens tomorrow when we open and volume comes in to shove the markets a little bit higher. Now let's take a look at some sentiment, seasonality, and then wrap it up. So sentiment hasn't really moved much. As far as the fear and greed index from CNN goes, we are down to 37, was 39 last week when I recorded this. And Bitcoin fear and greed index has moved from 27 to 28. Probably about, there was some news that institutional investors are trying to crush Tether, which, is going to be a major problem for crypto if it happens. Now, let's go to the seasonality. I do have a little bit more charts for you here. Just wanted to point out the probability of January being a positive month. You can see right here for the past 20 years, QQQ, we do have a 60%, which is not the worst month by far. We have February, we have June, and then we have September and December as being lower months, but definitely not one of the better months like March, April, May, or July. You will see for S&P 500 for the past 20 years, we do have only 45, so this is the worst month for S&P 500. It is also the worst month for IWM, so it's the small and the mid caps, and it is also the worst month for Dow Jones Industrial. So again, I said in the market price section, I do hope for some positive development, for some volume to come in, but no, seasonality wise, these are not favorable months to trade. So let's go to the recap, and then that'll conclude the video. So in short, nothing really has changed since last week. So I do apologize for ending the year in such a negative red way, but the models are on sell, setups none, market's negative, put volumes increasing, volatility is increasing. Although VIX is not reacting that much, but we have had about a week or so sideways action in pretty much all of the major indices. So this definitely tames the volatility a little bit. Of course, we do have the recession, the Fed hikes. I don't even mention the war between Russia and Ukraine anymore. And is one word that I want to really stress on, that'll be patience. Be patient. The time for our style of trading will come. There is time to trade breakouts. Now it's not the time. Monitor the market, monitor the Discord for updates. Every weekend we do have this video coming out, so if something changes, we will notify you in a timely fashion, and you'll be able to jump back into the market. So I hope this was beneficial. I really loved the year we did have. Of course, it's been a rough year for trading, but our community has grown immensely, and I'm very excited, and I cannot wait for 2023 to see what it holds for us. Again, as I said, be healthy, be happy, and we're just gonna crush the markets this year, guys. I know it. So see you next week here in YouTube. I hope you like this video. Please subscribe to our channel, really helps us out. And of course, I'll see you in the Discord server. Till next week, bye bye.